The cooperative movement here in Kenya is a major driver of socio-economic development. With more than 8 million members and, of course, the largest movement in Africa, this is, of course, a key driver of economic development. But it has been facing many challenges and opportunities at the same time. And that's why on this week's episode of Inside Government, we're talking to the Chief Executive Officer of the Saccos Societies Regulatory Authority, Peter Njuguna. He'll be giving us an update on where this industry is, the challenges and, of course, the opportunities and the way forward. Thank you very much indeed, Bona CEO, for joining us. So when you look at this industry today, how would you describe the status that is operating today?
Thank you very much. To look at this industry, we have to look at this administration when they came in. The fifth administration came and set up Ministry of Cooperative and Micro, Small and Medium Enterprises, underscoring what you just said, the importance of cooperative sector in Kenya. And I would say, like you say, it cuts across all facets of the economy, whether it's agriculture or the value chains, you'll find them. Transport, we have, transport cooperatives, financial sector, housing, and the like. And therefore, looking at, at it today, you can actually say, in spite of all the challenges we face, you'll find tremendous growth in the industry. And I say this from a financial cooperative perspective because we have the numbers and we see how credit is moving. And over the last 3 years, we've seen the assets grow to exceed $1 trillion. Growth over the last 2022 to 2024, we are seeing over 25% growth to register 1.1 trillion.
That is compounded growth.
Yeah, that is compounded growth. And when you look at those numbers, they are going to the key sectors that government is focusing on, meaning that like you said, the socio-economic development, they are actually at the center of it, driving it. And when you look at that, you see this 1 trillion, or in assets, comprise near 80% of credit. And this credit is funded by deposits from members and capital. And all those are growing at the same rate, over 20%. And that therefore tells you that it's in a very good state and financing the economy, financing farming, financing housing, financing trade, and financing education. So it's in very good state at one. And then looking at it from the capital perspective, which is very, very good measure of the resilience. Again, that has grown, again, at 15% over the last, compounded growth over the last, those 2.5 years. So from where we sit, in spite of the challenges we are facing, the Sacco industry is in good state. And I think we are putting in, addressing some of the challenges to make sure it's sustainable and building resilience.
I'll be coming to the challenges that you are talking about. But when you look at this industry, you're talking about an 8 million strong membership in a country that has almost 60 million people. Would you say this is a good number, bearing in mind that this industry has been with us for more than 100 years?
Thank you very much. Like you say, cooperatives have been in Kenya for over 100 years. But I think the numbers you are citing are essentially the financial cooperatives. Yes. Like I said, those numbers may not include dairy farmers who are also doing production level, but they are one way or the other being served by financial cooperative. So the numbers we get may not be including what, the farmers, the transport cooperatives, coffee farmers, it may not be. When you include that, is obviously over, 10 million. Actually, the numbers quoted is about 15 million. But now, even the number you are saying, 8 million, we measure it against not necessarily the total population, but you look at adult, population, people who you expect to be economically active. And that, I would say, 18% against the adult population, it will still be about slightly over 30%. And, looking at the history of financial sector development in Kenya, you'll actually say Sacco industry has done very well. However, and I think when we look numbers from 2010, the numbers when SASRA came into regulation and therefore collecting numbers on a continuous basis, you would say that number was about 2.4 million. Today, we have seen Saccos that had barely 20,000 people, they have over 100,000 people. We can say, given the constraints and the overall sector, where financial sector developing in Kenya, it was largely for employed people like you and me. But now we have seen financial inclusion agenda now being at the core that we are not just setting up financial institutions just to be there to serve the white collar, economy, but they also done. So we've seen that, and that's how we find Saccos. You'll find today a Sacco that is predominantly for civil servants, maybe in certain ministry. They have opened up to serve, agriculture. They are serving, micro enterprise, and that numbers which you are talking about is, is growing. Okay, and we expect with the policy initiative we are initiating, it will continue to grow. And don't forget that this growth you're talking of, for that time, has also been realized in a context where the competition in financial sector is neck to neck because of digital finance, downstreaming of commercial banks, microfinance, digital credit provider. So it's a very competitive environment, but the Saccos have remained popular and resilient in providing financial services to their members.
And when you look at this industry, I mean, in the last 5 years, it has gone through what we call a cycle of bust and booms. We went through a debilitating COVID-19 that really impacted people's revenue and purchasing power. Then came the political cycle. Then we went through a major drought. And so all these have been challenges, facing this industry. Plus also bearing in mind that, there has been a lot of commercial banks venturing and, of course, entering into the turf that has traditionally been the area for Saccos. What would you say is the biggest challenge facing this industry today?
I'll actually, as I answer the question on challenges, we'll actually, give it to Kenyans for the resilience they have demonstrated in the face of these challenges. And looking at Saccos, we call them, they are described as people's banks, because unlike the traditional banks which are owned by an investor putting up capital and then being authorized to collect deposits from corporate, government, name it, Saccos are formed by ordinary Kenyans putting resources together, and in the face of this we have seen this growth. And that is in spite of the many challenges that you can face. One, loss of livelihood with the issues you have, challenges we have faced. But you find growth in deposits of not less than 10%, including the COVID year. The political year, you still find growth in assets of over 10%, and the quality of assets has remained good. So I think being these, people's banks or customer-owned financial institutions, the owners actually hold them together. And for coming to the challenges we face, from where we sit, that these entities would actually possibly do even much better, if some of these challenges are addressed. One, I would say Saccos, as they are deposit-taking institutions, meaning they compete with traditional deposit takers. But one, we do not have critical elements of stability like deposit protection. It means Kenyans are saving together, but in case of a problem, which can happen because of the storms you have said and other calamities, they're on their own. When you compare with other elements of the financial sector, they have what you call safety nets. In the event of a collapse, you don't go home empty-handed. There is a mechanism to resolve that failure. So that's one bit that is for us. We are looking at that. So you find the cabinet made a decision last week around it. Then other major challenges for us is liquidity management. There's what we call liquidity management in deposit-taking institutions, that in case I'm short of liquidity today because of the just nature of my business, there's a fallback within the market or through a mechanism backed by government or properly structured. So those are elements we lack. And Saccos, therefore, because in the law we require them to have contingency plans to manage the liquidity, they have to go have commercial contracts with other lenders. And that means they are borrowing that at a very, what I call commercial rates. But when you have interbank, you find like interbank market, what you now think there should be inter-Sacco market. You go at terms that are much more, appropriate for deposit-taking market.
Highly regulated.
And highly regulated.
By the central bank.
Absolutely. And that brings, but it's, whether it's central bank or government, it's the job of government to put appropriate regulations. And that's why we are pushing to address those challenges, because we feel, and lastly is that this growth, whether you're serving SMEs and Kenyans, today Kenyans want finance on the go. Okay, that means you need to cash in, cash out, because you want to enjoy the deposits you put in your Sacco anytime. Now, access payment solutions. Again, Saccos have to access them through third parties. Again, meaning it's again costly. So that undermines financial stability. Undermines financial efficiency and financial inclusion. That's why I say that if these barriers we are trying to address and challenges are addressed, this number 8 million would easily double. Because other markets, what you find is that you have a very fair operating environment. Let the customers decide, because they are deposit-taking institution. Let's put the regulatory framework that ensures resilience, competitiveness, but above all, protection and efficiency of the financial market, because financial market, remember, is a service industry supporting the rest of the economy. If it's inefficient, that inefficient is passed to the rest of the economy. So it's a very critical element, given that it's serving the bottom of the pyramid, now the new term hustlers. Then you need to make it efficient to actually do that better.
When you look at the management and governance of Saccos in this country, it's proper to say that it has evolved tremendously in the last 10 years. But we're still having challenges with ethics and governance in this industry. When you look at SASRA, which is the market regulator, is it well structured to address the ethical and governance issues affecting Saccos?
I would say governance, yes. Ethical is, again, very personal. And I think when you put governance systems, you expect the people put in position of leadership and management to do the right thing, whether the regulator is seeing or not. Because remember, the first level of regulation in any business is a management put in place, who are put in place through a very clear process, very competitive process. Okay? And therefore, I would say governance, they are still, a journey we got to walk. And I would say this is inherent in the model. Okay? And therefore, in the model, and also the model. Why do I say that? You are looking at a model where I'm the owner, I am the depositor, I am the borrower. I want it all. I want the cheapest loan. I want the best returns. I want it all. Yet, I don't want to also forego my dividends to actually invest in better systems. And that is why, over the last, 15 years, SASRA has been regulation. You find a lot of transformation has come in, because it's through capital. You invest back in getting the right professionals that can tell the board this decision is right for the issue because on 1, 2, 3. When you don't have, less professionalism, you are likely to have challenges. So we've walked that journey, and we have seen a lot of the past 15 years we've seen a lot of transformation. Now, the elements I'm talking about is where now we have, talk of, creating an ecosystem, which we see. An ecosystem that actually enhances what you call market discipline. Because today, Sacco is illiquid. As a chair of a Sacco, you want to serve members today. So you will take money from anywhere at any price to serve the members' needs today. You get it? Because you don't have a choice. There are no market mechanism to actually even regulate you. But you are saying, I want to serve members today. That's what I'm saying. There is a framework, institutional framework you actually put that beside what we are doing from the prudential regulation, that these market mechanisms support you to actually be efficient, and here is I can serve members. So yes, we have a journey to walk, but I think we are getting there as we put these structures, like you found the ministry, cabinet minister say last week. It's some of the reforms we are saying that, look, we can focus on institutional governance, which will continue because there are Saccos that are doing a sterling job, but there are a few elements. Now, can we have a mechanism where we can pick that early, and not just pick it, but we, on a daily basis, we can actually tell. Today, banks assist, the regulator has a view of what they have timelines. SASRA has to see that after 30 days. And even if I'm seeing a report, not through a system. You get it?
And this report is applied by?
The same management.
The same management.
You get it? So there are institutional mechanisms that we need. That's why you hear us talking about central liquidity facility, where your liquidity, by you close business, all the settlement happens, by 5, 6, we can see a report. Who is on the red? Who is not? Do you have enough reserves to? But today we don't. So Saccos will issue checks right, and center, because the money is seated elsewhere. So there are mechanisms that the institution we are talking about today, except for the name, they are banks to their customers. And they are competing in that market which has become very competitive. So they are, while we work on the governance in the standard sense, we are also saying that there are market institutional arrangements that we also need to bring to actually support the ecosystem and then promote what you call market discipline, which now also filters to supports the institution.
I have heard this from a number of financial consultants and experts that SASRA should be a department within the Central Bank of Kenya. What is your feeling on this? I
think yes, it's good you ask my feeling, because that would be my personal view. Otherwise, whether Saccos are regulated, where that's a policy of the government. And I think government of Kenya made a decision. But I'll say this, it is not where it is placed that is matter. It is about strengthening the regulatory framework to be agile and dynamic enough to address the risks and the operating environment, regardless of where. That becomes critical, because in our board today, we have a board that is where you have Treasury, you have Central Bank, and all that, and therefore we work. And then over and above that, we have the Joint Financial Sector Regulator, where we work together. But that, until you create that safety net specific to Saccos, then what will you do, regardless where you put it? To give you an example, you look at banks, they have Kenya Deposit Insurance Account. That's a safety net. In case of a problem, there is no member Kenyan who will go to the street complaining about their deposit, because it's automatic. There is a failure, you sort it. You go to insurance. There is a policy compensation fund, again set to deal with policy holders. You go to securities market. There is investor compensation fund. Investors will be so those are the tools you require. The tools you require, and then because luckily we are funded by the industry, and the industry is ready to fund us. But again, we got to, as a regulator and government, we have to deliver on the other, because there are things the industry cannot invest in. It is the strengthening regulatory framework, and that is what we think. So that now, regardless of who implements that law, it will be resilient and complete to handle the risks that the businesses we regulate are actually facing.
When you look at the last 5 years, I mean, there has been a high turnover of Saccos, that are going through financial difficulties or financial challenges, from Metropolitan Sacco, Ekesa, Mwalimu, and now we are even talking about Cusco, the umbrella body. What has been happening in that you would attribute to this high number of Saccos having issues?
One, I think Saccos in Kenya have grown, and they are responding to the needs of their members, market-driven needs. But I think as the business changes to more complex operations, the policy framework regulatory regime is not changing fast enough. That's why we, as a government today, we are saying, and you've heard our cabinet secretary say that time and again, that a sharing in a Sacco should be as safe as a sharing in any other financial institution. That is a very strong statement, because you are saying we have regulated these institutions as simply as cooperative. But remember, even other financial institutions are first and foremost companies. So cooperative is simply a legal form through which you organize your business. Now, the business regulatory framework must be up to the risks that we are talking about. And that's why we are talking these elements, these pillars, whether it's prudential regulation, liquidity management, safety net, stabilization fund, and then enforcement. Because in a financial institution, you don't want to imagine criminal action, chasing, after the horse has bolted. Does not help. As you do that, because that will also happen for those who criminal offenses, you want to make sure that the depositor knows they will not lose a shilling. Those are the elements that we have lacked, that we need to recognize that, yes, Saccos and financial cooperatives are financial institutions. They take money from citizens with a promise to deliver X. How do we make sure they deliver? And in the event they are unable, what is the mechanism to make sure that the member or that Kenyan does not feel the pain of losing a shilling? That is what globally the practice, that these institutions have to be treated just like any other financial institution, because their currency is, I mean, their input, raw material is money. Their output is money. So how do we make sure this money from end to end? That is a conversation that we are pushing now, and I'm happy that this government is very serious. If you recall, you talked about 2008 when this statute was done. That administration had Minister of Cooperative that focused on these issues. Now we have this administration that has again said, no, looking at the cycles, now we need to have the potential, harness the potential of this sector. We actually need a ministry to focus on the policy, because there are policy issues that require to be presented through the highest decision-making organ of the government, through the cabinet. Otherwise, it'll get lost in, when you put it all under other ministries, they get lost in other. But now we believe that this administration and the policy initiative you are saying, they'll actually fix those things, but recognize that. And whether it's a Sacco, whether it's a housing cooperative, whether it's an investment cooperative, what they solicit from their members is money.
As a regulator, and I'm asking this because of what has been happening with the Kenya Union of Savings and Credit Cooperatives. When did you get a wind of what was happening at Cusco, and how did you react to this?
If you recall, 2022, there was a lot of engagement to bring this institution under regulation. And I think that's when I took over I came to this office late 2022, and we started the conversation that time to bring them under regulation, because remember, we have deposit-taking Saccos, which we brought in 2010. 2020, we made regulations, again, to bring another tier of Saccos. That's why we have 355 today. Then we said, now look, the secondary union, which is for Saccos, you need also to be regulated. And we started. We engaged 2021. They promised us what they were doing. Remember, the union does advocacy and many other businesses. So the idea was to separate the financial business for regulation. And they promised they are separating. That did not. By the end of 2022, we realized they are not, so we escalated to we had kept the ministry abreast of this, and we thought they meant their word. 2023, we felt they are not going anywhere. But at all this time, we are not pushing them to regulation because we think there is any fraud on all that. No, we are saying, no, we have brought the small Saccos. Now you are a critical player, we need to bring you in. Until now, we were directed, when we escalated to the minister, then we told we were directed by the minister then to do an inspection. And we moved in. And that's when we were stopped. They went to court and stopped us. And that's when you realize, why would you resist regulation? And it was escalated until the forensic. We realized from our report, because we were there for a couple of days, we found difficulties getting information. So, and that's really where we sensed this. There is no way you're going to be resisting inspection, which is supported by law, even though you are challenging, if there is nothing to hide. So it went from there. That's when all these things now have come up. But nobody, even the Saccos that were putting money there, they will tell you, we were getting money in January, we would put money there. In January, we get deposits and pay, we get back our deposits and pay dividends. So we had no reason to believe that there was. So, for us, it's one of those things that you actually say, yes, being outside of regulation is very, very dangerous.
You see, the ordinary Wanjiko in the street doesn't understand that institutions like Cusco do not fall under the purview of SASRA. The question they're asking is, where was SASRA when all this was happening? And these are some of the domino effects of some of these institutions. And how is this likely to affect this industry going forward? And what mitigationary measures are you putting in place to ensure it doesn't happen?
I think reviewing the amendments that have been proposed in terms of Saccos Act, those are very, very key. Because now you'll be saying the primary Sacco is regulated, but where do they put their money? We must ring-fence that they are investing in regulated space. That's very, very critical. Plus now they are. But I think more critical to a member of a Sacco out there, I think the assurance we want to give them that looking at the numbers, this and how we are managing it, that member of the public will not lose their money. Okay? And I know that there has been conversation around the standards, compliance with accounting, but we are saying first and foremost, we want to assure that members that your deposits are safe, that these are losses, yes, your institution will absorb as a business, but they will not come to you. Okay, one, because of capital. I did say I want to qualify that looking at, and that's again thanks to prudential supervision where we have capital adequacy, the losses we are talking about, O'Brien, are slightly under 10%, to be precise about 8% of the capital of these institutions.
Mm-hmm. And that is still significant.
I'm saying it's significant. When I bring capital, it's because if we did not have capital, like before regulations came, that loss would have been straight to the members. So capital is critical in protecting deposits. So that is already, so the members. Now we can now talk, how do we as a business absorb these losses? And that's what we are saying, from your revenue, income generated, set aside some money in the name of provisions, a technical term, so that you cushion yourself. What are you doing? You are retaining liquidity so that that member who wants a loan today, who wants some access their deposit, they can access. So those are the regulatory now rail guards we put so that members now, as you have the conversation about provision, first of all, your deposits are sound. And we are now, the idea of also allowing for amortization in a way is to make sure that this member who has put X amount money there, he's the owner, he's an investor, he expects some returns. If you say he suffers, absorbs this loss today, you cause flight of members. Now, you are now start undermining the sustainability of that business. So those are the questions. They say that critical is the mechanisms, technical mechanisms through the law we have communicated to the Saccos as to make sure that that depositor's money is safe.
Before I let you go, in the interest of time, you're also having a situation whereby there are so many employers who are not remitting the deduction from members to the Saccos. How are you handling that?
Thank you very much. I think that again speaks to what you alluded to earlier, that the economic environment we are in, there has been challenges. That's why the employer, who was very religious, submitting, they are not doing that. And there has been a multiple approaches. One, there is a legal one provided where you work, legal mechanisms to push the employer to pay, where they give. But where that does not work, we are saying, look, the Saccos should then have arrangement, and that's why access to payment system, members being able to access their money in and out, being critical, that let me not go through the employer. Let the member, you as a member, have that direct ownership. Sign that direct, because Saccos have Fossa front office, which is a banking facility. They have ATMs, they have mobile channels. Direct your salary and your loan to be accessed through that, so that because you remember, employer is a third party, is acting as an agent of the Sacco. So we have seen increasingly, when members are being educated that this is your bank, you put your salary here, you come here for your loans, you go to have faith in us, we have all these, let your employer pay us. And that is curing that. That's why when you look at the portfolio we have for remittance, largely is historical. Moving forward, we are saying, look, this is a global problem. That is not affecting one Sacco. Can we be innovative from a business strategy? And that is actually paying, even as we push for payment system access, which we think will also be a game changer. And
finally, when you look at this industry through the lenses of the last 100 years, I mean, you sum it as phenomenal growth. But in the era of artificial intelligence, the Internet of Things, innovation, where do you see this sector in the next 20 years?
Very well. Indeed, I would say, O'Brien, that is at the heart of what we are pushing, secondary Saccos. Because we realized large Saccos are able to invest. They have the financial muscle, they can hire the people, they can get the technology. You can see they are spreading all over the country. But there are so many Saccos out there in the agricultural community, whether it's fishing and all that. And therefore, by creating this secondary Sacco, which can actually come to provide technology solutions to 10, 100 Saccos, they'll be able to derive on skills. And through that, then you're able to bring fintech innovations around that. Because some of the markets, we had a workshop in July, and we were discussing about how can machine learning and artificial intelligence be adopted in Saccos. And There has to be certain standard. The industry. Years, but Saccos, we're talking about 50 years plus now. None has hit 60. Yeah. So, but what we are seeing is a growth that cannot be sustained without adopting technology. But that technology needs to a level where you say, as an industry, you are called an industry because there are certain standard practices you have. And that's why the push to financial cooperative Sacco industry is very critical, so that you say there are certain things minimum we expect to have, whether from governance, from technology, is here. And I think that is at the core of our agenda in Sacco shared services, because in that, we're also pushing for what you call a Sacco technology shared platform that can serve 100 Saccos with ease, because today's scalability is not a problem. And that will allow fintech investors to actually invest knowing that the market is there. So those are some of the reforms we are driving to stimulate adoption in an efficient and secure way in the Sacco industry, because we know sustainability, competitiveness, and resilience of Saccos cannot be without technology when we are talking about finance on the go.
Very good. Peter Njuguna, thank you very much indeed for having this time with us, and of course for allowing us in as to where the market is, and of course the dynamics that are going to change and revolutionize this critical industry. Your time is highly appreciated. Peter Njuguna is the Chief Executive Officer of the Saccos Societies Regulatory Authority, joining us to help us understand where the market is, and of course the challenges, the opportunities, and the way forward. And of course you have heard it from him. O'Brien Kimani is my name. Thank you very much for watching Inside Government. Thank you. Bye.